If you thought rate cuts would give you some relief in the housing market, think again. The median home sales price nearing all-time highs, just about $9,000 away from that, and mortgage rates jumping back up to almost 6.8%. Joining us now is EJ Antoni, Heritage Foundation public finance economist. Talk to me about how desperate people are for affordability. All of that comes, a lot of that, within the housing market. But you don't think it's going to get solved anytime soon? Why?
Well, Taylor, people are absolutely desperate. You're 100% right there. And if we look at exit polling data, for example, we can see that the lack of home ownership affordability was a key driver behind people voting for President Trump again. And in fact, we have a lot of states where not a single major metro area within that entire state has affordable homes for people on median household income. So it has definitely been a huge problem. But now the issue is that interest rates and home prices have essentially recoupled. In other words, as interest rates go down, home prices go back up. And the reason for that is because it's cheaper for people to borrow, so they can borrow more, and now they have more money to further bid up the price of homes. For a while there, that relationship was broken, but that was simply a function of people getting incredibly low interest rate mortgages and then being locked into those mortgages, what we call golden handcuffs.
EJ, speaking of interest rates, the Fed cut 25 basis points yesterday and also hinted at the fact that we've got this stubborn inflation embedded out there in pricing. Also talking about this notion, that the 2% target remains on track. So we still have work to do. Do they cut again in December? Do they wait to see what happens? How does this play out?
Jackie, I think they are going to cut again. And the reason for that actually has nothing to do with inflation. It also has nothing to do with the labor market, by the way. I know they talk a lot about their dual mandate and how they're trying to target a certain level of inflation. They're trying to target full employment, whatever that means. No one's ever been able to define it. But whatever the case, I think the Fed is increasingly worried about ticking time bombs within financial markets, within the financial system. Banks are still sitting on hundreds of billions of dollars in unrealized losses because they got on the wrong side of the interest rate trade and have never been able to get out from under that. A lot of that has to do with the fact that Powell kept promising everybody for months that they weren't going to raise interest rates for years, and then he proceeded to hike rates at the fastest pace in 40 years. And let's not forget the Bank Term Funding Program still has about $50 billion in outstanding loans that are going to come due in March. Again, I think a lot of this has to do with the Fed trying to rescue financials.
All right, let's talk about the Fed rescuing consumers as well. We talk about inflation all the time. EJ, I want to throw a word out to you because I think it's what a lot of people would actually like to see, and that is deflation. We want to see prices come down. But my question for you is that a reasonable expectation? In this world, could we actually see deflation without the recession that seems to always come along with it?
Brian, in a strictly academic sense, I think the answer there is no. I say academic because deflation is technically a monetary phenomenon. It's when the Fed tightens credit and reduces the money supply so violently that you have fewer dollars relative to the size of the economy. And that's where you get those violent contractions in credit and also the recession that follows. However, if you can reduce the price of a ubiquitous input in the economy like energy, which is a key thing that President Trump wants to do over the next 4 years, you can then bring down prices throughout the economy. And I'm very, very happy to see that that's one of the goals of the incoming administration.
I just love the word ubiquitous input. Can we use that on this show more often? And we made EJ smile, and that's one of my main goals in life. Well done, EJ. I love it.
Quickly, if asked to serve in the next administration, would you?
Oh.
That's entirely up to the president.
Okay. EJ Antoni, thank you so much. We appreciate it.
I wanted more from that one. I wanted more.
We'll press you harder on that next time.